This is The Bottom Line, a show designed to help Australian businesses succeed. On the show, you'll hear from leading Australian business owners as they share the lessons they've learned building their companies. You'll learn from their successes as well as some of the challenges they faced along the way. We also talk to experts from a range of fields who share specialised techniques you can use to improve your business. I'm your host, Sevan, and I'm a director at Alexander Spencer, and I'm really passionate about helping Australian businesses succeed. Josh, welcome to The Bottom Line.
Sevan, thank you. Excited to be here.
I'm very excited to be interviewing you. We've had dinners, we've had lunches.
all under the sun.
You financed some stuff for me. You financed lots of stuff for our clients. So we're really excited to have you on The Bottom Line. It's well overdue. So yeah, happy to have you in the studio.
Fantastic. Thanks, man.
So look, before we get into it, you know that I love your business name. It is the best business name of all time and the logo. So let's take it to that entrepreneurial journey. Obviously, you've got your own business in equipment finance. You're a specialist in that field. But how did you get there? Take us through your journey.
Yeah, so I guess starting off with the name, the logo, I think I probably watched too much Wolf of Wall Street when I was young, and that's the reason. So I guess where do I start? So I guess I'll probably start back from the very start. So I grew up in Melbourne, suburb called Seaford, which is sort of down towards Monty Peninsula. Had a really relatively normal childhood. In saying it was amazing. You've got amazing parents, amazing family. There's four of us. So I've got an older brother, two sisters. And yeah, when I was younger, I guess I sort of never, like any kid, was just absolutely obsessed by sport. Didn't really know what I wanted to do. And as I got to, I went to just a local primary school in Seaford till I was in grade 5. If you ask my parents, I was a horrible kid. It was very, very hard to deal with. Mum and Dad called me the devil, but I think I hopefully grew out of that. Just too much energy, too much stuff going on. So year 5, at the time, my older brother, he and my older sister they really liked him into Haileybury. So in year 5, I think I probably got into too much trouble at school being too young, and ended up going to Haileybury in year 5, which was amazing. Both my parents worked really, really hard. Send all 4 of us there, which was great. So I was extremely lucky. And obviously thank my parents every day to be able to send me to such a good school. So that was really good. Sort of got into my high school years, and anything I was sort of really worried about at the time was playing footy. It's really the only thing I really wanted to do. A lot of things going on. Had some horrible injuries and all that type of stuff going up, and obviously probably wasn't good enough, even though I thought I was at the time going up. So that was really good, and still sort of got up to year 12 and still didn't really know what I wanted to do. Like I said, I probably watched too much Wolf of Wall Street and always sort of wanted to get into investment banking and all that type of thing. Like I said, I didn't really know what I wanted to do. And then it's actually funny. So I remember, like I said, I probably didn't take school too seriously, which is probably to my detriment. But okay, this is quite funny. It's something I'll never forget. I remember one of my teachers called my dad. I was probably about a month out from my year 12 exams.
Oh no, that's not a phone call.
Oh no, not at all. And I remember the spray that my old man gave me. God, I still remember it to this day. And it was probably like it was about a month out from my first English exam. And Josh hasn't been applying himself. And I got home that night, and yeah, the spray was horrendous. And it was basically, mate, I spent $500,000 on your schooling for the last 10 years. Like, you need to basically pull your finger out. So I reckon for the month leading up to that, I reckon I slept for a month and just basically learned the whole school's curriculum in a month.
Well done.
Ended up actually scoring pretty well. I still don't know how I did. Like I said, still at the time, I had no idea what I wanted to do. Got into the degree or the course I wanted was commerce finance at Monash, which was awesome. But like I said, still at the time, didn't really know what I wanted to do. I think probably in my head back then, I just wanted to make money and I guess have the sexy job of walking around Collins Street in suits and, being an investment banker. But yeah, so anyway, it was actually funny. So when I ended up going to uni, still didn't really know what I wanted to do. Always been okay with numbers. Anyway, so I remember I graduated uni and it was funny. So it was right at the start of COVID.
Oh.
So that was when I finished uni. It was
Lucked out,
Yeah,
probably.
yeah.
Well, kind of.
Pretty much. So essentially what I did, still had no idea what I wanted to do. I'm like, oh, well, I'll just get a job and I'll sort of figure it out from there. And I applied for all the investment banking roles, all the grad programs, all that type of stuff. They all were cancelled because COVID had just started, and I'm like, shit, I need to get a job here. I finished uni. There was basically no jobs, but still, at home, can't leave. I'm like, okay, this is an issue. Anyway. So at the time, I think all the grad programs are probably still all the same. You do like aptitude testing and all that type of stuff. Anyway, so basically they all got cancelled. And then I remember got an email and a phone call from ANZ probably 3 months later. And they said, look, grad program's cancelled, but we're going through the results and you actually tested quite well for the aptitude testing. How would you feel about a permanent position?
Oh, okay.
So that was really good. But the funny thing was all the onboarding, everything was all done from home. So I worked through ANZ for a year and didn't actually go into the office. Everything was done from home.
That would have been difficult as a young first time into the workforce.
Yeah, it was.
Big corporate at the same time.
Yeah, it was really hard. And me being me, I'm pretty extroverted and like being in a corporate scenario. I'm around people. And it was difficult. But anyway, I sort of worked there for a few years. To be honest, didn't really like it at all. I was at ANZ for probably 3 years, and nothing against the bank or anything like that. They're a great bank, awesome corporate institution. I actually still use them quite a lot now as being a broker. But to be honest, I didn't feel challenged, and I'm a really competitive person, and I wanted something to get me out of bed where I, number one, felt useful, but number two, something where I feel like I can compete and having a bit of a sporting background as well at the same time. I sort of felt like I was not being useful. I wasn't really helping anybody, and I was just a really small cog in a really large machine, and didn't really like it. Anyway, I sort of remember at the time, I had a family friend who had been an investment banker for 10 years. And my sort of always plan was using ANZ, I guess, as a retail or a commercial bank, as in sort of as a stepping stone to get into investment banking. And I remember sat down with this family friend. I'm like, I'm not really happy with what I'm doing. Can you sort of give me a little bit of guidance? And he goes, yeah, mate. Essentially, he goes, I was investment banking for 10 years, and now he owns a pretty large financial advisory business. He said, he goes, it's so funny. You really remind me of me when I was your age. But he goes, I think the issue is, and I had the same problem, is you always, when you're younger and you're sort of looking at people, the position that you want to be, and you're sort of always thinking about the sexy job. You want to walk around in your suits on Collins Street and sort of say you're an investment bank and all that type of stuff. And he goes, mate, you need to think, he goes, if you go to, an investment bank, he goes, it's going to be a lot worse than where you are now. You're going to be working longer hours, and you're going to probably be in an even smaller cog in a larger machine, essentially. He goes, do you really want to work for someone else and work for 70 hours a week? And again, you may not feel as useful. And he goes, when I started my business, it was the best thing I ever did. So I'm like, okay, so that's sort of giving me a bit of an indication, or maybe just a little bit of help on what I actually wanted to do. Anyway, so I reckon it was probably a month later I quit my job. I was going, at the time my brother was getting married in Portugal. So I went over to Europe. I hadn't done much traveling. I was 24, went to Europe for 3 months. Still didn't know what I'm doing. I was worried about it when I get back. Anyway, so another family friend who you met, Jono, who I basically owe my life to for helping me at the start get into it. He was a finance broker, owned his own firm. He goes, mate, come work for me for a year. I'll train you up. He goes, I think you'd be good at it. And then we'll have the discussion in a year where you go by yourself or whatever you do. So essentially I got back, started working with Jono at Premier Finance Group, and yeah, pretty much the rest is history. So he basically trained me up, still helps me out to this day, obviously, and he's just been amazing. Like he's been the best teacher, best mentor. He's been absolutely amazing for my career going forward. And yeah, I guess if it wasn't for him, I probably wouldn't be where I am now. And so business has been running for, I guess Lion Financial Group Co. has been for about 3 years now. And yeah, it's fantastic. And I guess the main thing is I'm absolutely loving it. And I really wake up every day, love going to work, feel like I'm helping people. And that sounds weird, but I guess in a business and a corporate sense, I get to compete every day, which I absolutely love. So it's great.
Yep. So it's called Lion Financial Group. Tell us about the logo. Come on. I want to know, you were going, young guy is going to come up with this awesome name, and I think it is an awesome name. One of my largest clients that I worked on was called Lion Quality Product. So Lion has a little thing in me, because that was the client and the business that I worked on as a junior accountant, and really made my mark off the back of that client. So it was called Lion Quality Products.
You've told me this
Have
story.
I? Yeah, and now Lion Financial Group. Well, tell me about it, because it's an awesome logo, an amazing brand.
Yeah.
How did that come about?
This is actually embarrassing. But anyway, so I had everything ready to go. So the ASIC had been basically done, or the company had been set up, and literally the last thing I needed to do was my accountant called me and said, "We need a name. What do you want to register?" I said, "Okay, it's really hard." And I generally didn't know. And at the time, over 3 years ago now, I was living with one of my best mates, but sort of, I said, right, I need to figure out a company name tonight. I said, right, sit down. We're going to sit down on the couch. We're not getting up until we think of a name. We catch a couple of beers, 3 hours later, literally no idea. And he makes a joke and he goes, "Oh, why don't you just call it Stratton Oakmont," which was Jordan Belford's. Yeah. That was sort of ridiculous. I can't name it. Everyone's going to think, dickhead or wanker or whatever. Anyway, and he goes, "Well, what about my mate goes, what about the logo? The logo is great, but his original logo was a big lion's head." And then one of my really good mates, his partner does she basically builds logos. She does marketing, but builds logos for brands. So I literally just sent her I was like, "Can you make me a logo with a lion's head?" And I'll make it quite sort of, I guess sort of old school, classy kind of vibe. And she sent me 3 back, and it was just perfect. I said, "All right, there we go. That's it." So,
boom. I love it. So take us through asset finance. So what does Lion Financial Group do? What kind of products and services that you offer to your clients? Give us a bit of an understanding of the services you provide. And then for the listeners that are maybe early in the entrepreneurial journey, I'd love to hear from those early stages and what went well and what we didn't. But take us through, first and foremost, the products and services that you provide.
So essentially, we basically do strictly asset finance, and we do some commercial stuff as well. But I guess with the asset and equipment finance, it's basically essentially any type of asset or equipment that a business needs. So, it ranges from basically everything, vehicles, agricultural machinery, excavators, cars, basically anything that a business needs, I guess, to run their day-to-day operations is what we'll do. So I guess a lot of the stuff that we specialise in is probably more for your blue-collar businesses as opposed to white-collar.
Yep.
As, obviously they're needing more type of equipment and machinery and all that type of stuff. But like I said, it can range from anything, whether it's, manufacturing equipment or, Lamborghinis, whatever it is, a massive range of stuff that we do. But yeah, mostly just strictly to asset finance sort of stuff.
And take us through that initial stage. So you're still early stage of your business. What were the things that went really, really well? And you're reflecting back going, shit, that was some really good decisions I made that have now paid dividends. Love to know what you did really well to get to where you are today.
Yeah, so I think the scary thing, and I think that most people, it was after, so I started when I was 25, started financial business when I was 25. And a lot of people were, aren't you scared or worried? No, this is fun. Like, this is fun for me. It's something I get to build. And like I said, I get to wake up and when I first started, so essentially when I was working for Premier and Jono, I was on 100% commission. So I wasn't getting paid anything. So I've come into a new job I was not earning any money unless I got sales or I was making commission, right? So that was a little bit scary. I don't think I did a deal for the first, or my own deal for the first 2 months. I think I probably went 2 months nearly without income, but I knew it would all be worth it at the start. So I think the thing that I guess that worked the most at the start is the main thing I always got told is don't ever be afraid to pick up your phone. And I think essentially my job and most people's job that are quite similar, it's a sales-based role, right? It's a services sales-based role. So you need to be as proactive as possible. And it's something I never really had an issue with. I'm pretty extroverted. I'm never really scared to get in front of people. But for the first, probably 6 weeks to 2 months, I was literally cold calling. I'd just rock up to businesses, knock on the door. Like I reckon I did that 50 times. I would literally just go and knock on the door. Hey, do you guys have a finance broker? Yeah, we do. Okay, no worries. If they can never get it, if there's something that they can never get done, here's my business coach, keep me in mind, that type of thing. And it was obviously got quite slow, probably the first 6 months, but yeah, I think persistence prevailed. There definitely was points at the start where, like, I'm not earning enough money, to survive. But yeah, it sort of just got to the point, and Jono, he helped me a lot, was more to the point where he goes, mate, just keep knocking on doors. He goes, it'll turn. He goes, when it turns, he goes, you won't even realise. He goes, you'll just be that busy and you won't even think about it. And he was so right. He was so right. But yeah.
You kept knocking on doors and then it turned at one point.
Just annoying people, basically.
Oh, that's all right.
Yeah.
Then what about the reverse in terms of a young entrepreneur that has been in it for a few years now? Do you reflect back and go, there were things that I could have done better, or if I did things a little bit differently, I'd be in a better state now?
Yeah, absolutely. There's, So to be honest, looking back, I probably needed to probably dust up on my, maybe my financial skills a little bit, because it's a lot different coming from a banking background where essentially you sort of have it, I guess you can sort of have a lot of things done for you and all these systems put in place, but then I suppose you're coming into, I guess, nearly a one-man band where everything's sort of a bit more manual. But looking back, I probably just needed to maybe dust up a little bit more on my actual financial knowledge, probably trying to understand specific points of, leasing, chattel mortgage, and all that type of stuff. I probably wasn't that good at the start. And I guess other things as well, like probably taking your time. As I was always, probably at the start, I was probably more concerned about just trying to get food on the plate or money coming in through, rather than trying to build those long-term client bases where you're going to get money coming in, in 3 or 6 months. We're trying to build longer relationships with people. I was probably more just like now at the time, because I sort of nearly needed to. Yeah. So anyway, I was not going to get any type of money. But I guess if we go back to something specific, I remember I hadn't been a broker for very long. So it's a pretty funny story. So I hadn't been a broker for very long. And I had a guy that I sort of knew who owns a pretty big transport company. And I was just trying to get some really good supplies and stuff like that. And he basically gave me a deal probably 3 months in. And I knew that I really needed to do a really good job with it, because then if I did a good job, it would have been like, okay, this guy knows what he's doing. I'll keep referring business. And it was a pretty large deal for a really large farmer over in WA. Completely stuffed it up.
Oh, no.
Just completely stuffed it up. Just didn't have enough of experience. Didn't really know what I was doing. And it was a pretty decent deal, and I just completely stuffed it up basically, and ended up at another broker ended up winning the deal, because I was just just not experienced enough. Didn't really know what I was doing, and that was one that it really hurt, because I thought if I could get this one right, I'm going to get referrals from this certain supplier all the time. It's going to probably kick my business off, and like I said, completely stuffed it up. This guy's never used me ever again. But stuff like that was a really important turning point, because I learned so much from that deal. And it, like I said, a lot of the time when things don't go your way, you learn a lot, right? It's either so as I say, you don't win or you lose. You win or you learn. So that something like that was really, really important for me. And never making the same mistakes again, I think it was really important. But yeah, that's probably one that comes to mind.
Yeah, I love that. And I think it's really important. I think we, at our firm, we encourage people to make mistakes, because you learn from your mistakes. Yeah. If you create an environment where people are scared to make mistakes, well, how are you going to learn, right?
Yeah.
So I think entrepreneurs, have this thing where they fear to try to get everything right, and that's what success looks like. But you need to make mistakes as an owner as well, because that's how you grow, that's how you learn. So I do like that tip, but obviously it's a sales role. In equipment finance, you don't technically get commissions. Or commissions on a regular basis, like a trail.
Yep.
And you're really as good as the last sale you've made and the relations you've built over time. For people that are in either sales roles or advice to business owners that have to go out and hunt regularly, what piece of advice would you have to them that you've learned and applied to your business today?
Yeah, sorry. I reckon one of the first things that we got told was get addicted to coffee. Have as many coffee, I guess, coffee appointments as you can with people. So remember the first few months, I was literally just going through my whole network base and trying to meet with everyone. Whether it was only, a coffee appointment that was going to bring me one deal a year, that was enough. and just meet and network with as many people as you can, because you'll be so surprised that people will keep you in mind 2 years later. Like if you go and have a coffee with someone or a phone call or whatever, and you get in their face, 2 years later they might go, oh, I know someone that wants to buy this or buy this. Oh, actually, I met with Josh from Line 2 years ago. Let's give him a call. But never be scared to pick up the phone and never be scared to knock on doors. Probably because it will hit. You just keep trying. It will get to that point.
Yeah. Well, let's dive into your technical expertise. Our listeners, some of them would have used equipment finance before purchasing equipment. But for those that haven't or want to get a deeper understanding of what it actually is, take us through what equipment finance is and then just technically how it works. People know what a mortgage is or a home loan, and maybe some other sort of different financing abilities around overdrafts and whatnot. But equipment finance has its unique special things. So can you take us through educating our listeners around some differences, what they are, how they operate, and so on and so forth?
Yes.
You can use an example.
Yeah, for sure. So I guess that it's probably the two most common products nowadays is a chattel mortgage or a lease. And a lot of people can get confused because I think a lease is an old school term where people will say lease, but it's actually a chattel mortgage. So I guess if we start with a chattel mortgage, to be honest, probably 95% of the stuff that we do is a chattel mortgage, just for the industries that we're involved with. But essentially a chattel mortgage is it's basically a loan product which a business can use to finance their excavator or their type of asset, basically to keep cash flow positive, right? So if someone, let's say they need a $100,000 excavator, for example, to go within their business, they might not have $100,000 in the bank, or they don't want to deplete themselves to cash flow. They might have the tax bill coming up or whatever it is, right? So we can essentially do a loan depending on the certain scenario, whether you borrow the whole amount or you want to deposit in, whatever it is. But essentially we can do a loan from, most of the time it can be from either a 1 year up to a 7-year loan term. Usually it's really common to sort of do, you see 3, 4 or 5 years is mostly the most common. And essentially then, you go to a specific lender, whatever lender is most appropriate for that customer's circumstances at the time. And then obviously bank or the lender will lend the money and then they make their normal monthly repayments going forward. And the chattel mortgage is so specifically non-financial advice, I guess I'd say, because you can pull me up if I say anything wrong. But chattel mortgage is essentially once you purchase the asset, the customer or the business can claim the depreciation on the asset, and then they get to claim the 100% of the interest cost as well. And then they get to claim also the GST back from the first payment. A lease is a little bit different. So a lease is more specific to businesses, mostly in the transport industry or businesses that turn over assets really quickly. So if, for example, like a big transport business, obviously there's so many Ks that go on a certain amount of trucks. So they probably will buy a truck every 2 years and turn them over. So a lease is... It's very similar. So the payments are still essentially the same depending on what the rates are and all that type of stuff. But with a lease, there's no depreciation. The business will just claim 100% of the lease payment along with the GST.
That's right. Yeah.
Yep. And it's just a lot easier for those type of businesses because they're changing things over so quickly. Essentially, they'll do a 2-year lease, get rid of the lease, and then go again. But if you did a chattel mortgage, you actually then own the asset, where a lease, the bank owns it. So with a chattel mortgage, if these transport companies essentially were chattel mortgaging all of their trucks, then they would have to buy the truck and then they'd have to worry about selling it, getting rid of it before they can go again, where the lease is just a lot easier because they're turning over their assets a lot more quickly.
And in the chattel mortgage example, do you need to provide any security outside of the equipment that's being purchased?
No. So obviously, depending on what the company structure is, the directors always personally guarantee it, but the only securitization over the asset security is the asset itself.
Okay, so in a business that's looking at bringing in machinery or forklifts and excavators, and they're looking at acquiring, hundreds of thousands of dollars of equipment, they're not going to be leveraging other assets to put up collateral. If you get the asset, value and maybe deposit or get it right, they could literally acquire $500,000 of assets over a 3, 4, 5 or up to 7-year period and use those assets as security over that. And there's that sort of why it's called a chattel mortgage, where there's a mortgage over the asset. Is that sort of why that's called that?
Yeah, and it's essentially really similar to a home loan. It's very, very similar. I guess the only other major difference is asset finance is fixed, or most probably 95%. It's all fixed.
Oh, so fixed interest.
Fixed interest. Yeah. So there's fixed repayments. Whereas depending on how you have your mortgage up, it can be variable depending on what's going on at the time of the REA. But it's all basically fixed. All the asset finance stuff.
What about if your business is doing well, you've put all this new equipment in there, and all of a sudden profits going through the roof? In a home loan scenario, you can make extra repayments. In a fixed term with a fixed repayment and a fixed interest, can you make extra repayments if you're doing well?
Yeah, so you can. So it depends on the lender. So each lenders have different policies. A lot of the time, usually rule of thumb, depending on the certain policies from each lender, you'll usually get about a 50% rebate or discount from the unpaid interest. Okay. So essentially at the time of payout, they will the bank will make a calculation how much interest you've got left if you were to pay that, let's say, over 5 years. Yeah. Whatever that amount is, they will then give you a 50% discount, and you can pay that if you want to.
Awesome. Yeah. And just on the lease side of things, so I generally get this, hey, Sevan, I'm about to buy a new car. Should I finance it or lease it? And I'm like, okay, well, we go through that. But take us through that leasing component. You use the example of the truck there where you said, you don't own the vehicle, the bank owns it, and it's essentially like you're hiring the car or the truck.
Yeah.
At the end of the 2 years, 1 year, the term, do you just literally give the truck back? Who do you give the truck back to, or the equipment back to? Do you get a new one? Well, I think it's more so the depreciation cost base.
Yeah.
There's probably more the value there. But there are rules around certain reporting entities where you need to treat an operating lease like a finance lease. Okay. So there's an accounting standard for leases that kind of covers that. Yeah. Unfortunately, Josh, the ATO and the accounting standards are pretty brutal. There's not too many loopholes left, but 100% there are some ways you can do that, and you just need to speak to your accountant. But let's take it through to the next step. I mean, you've built an amazing business in what you do. What are the ways that you improve customer experience? It's an area that we're trying to focus on here at Alexander Spencer. I guess being a transaction business, how do you take customer experience and the journey with the customer, and what's your philosophy on that?
Yeah, so I think that I feel like I felt it's probably my one of my major strengths is I guess customer service. So we're obviously quite small compared to the larger brokerages going around. But I remember I was always told as a broker, always pick up your phone. And if you can't pick it up, always call them back within an hour, which is something I still do today. I really pride myself on. And I guess that's probably also the reason why certain businesses would rather deal with a broker as opposed to a bank. If you're dealing directly with a bank, you'd call the customer service line, you can sit on hold for an hour, and it can be there's so many different departments and portals and things like that you've got to go through, and it can be quite frustrating. I guess with me is I genuinely really want to help my clients as much as possible. So if they've got an issue, they come straight to me, and I can go to the relevant departments or banks or lenders or whoever it is, and just treat people the way that you want to be treated, and genuinely just be a good person. If someone calls you for something, even if it's really minor, like a payout letter or whatever it is, just try and literally get it to them as quick as possible, because that's the reason why someone will stay with me as opposed to going somewhere else. Because most brokers they've got access to similar products and rates and all that type. So we've all got access to basically the same type of thing. But I think it's the customer service and the way that you treat your customers and the way that you basically treat them as a person is the way why they would rather be with Wine as opposed to someone else.
And in terms of cars, because I know cars is probably the most widely equipment finance product in terms of the assets that are being financed. Sometimes I get calls from clients and they'll say, I'm getting 2% interest or 0% interest, or the dealer's got this awesome deal. How do you compete with customers that may have used you and then they go to a dealership to buy a new asset, they love you, but their rates are really low? Is that a bit of a wazi or squazi, one of those kinds of things there going on the Wolf of Wall Street? Is it really that, or is it
Fugazi.
That's the one. Or is it a real? It is a zero. So take us through that and how consumers should be thinking when that happens.
As long as we can cut this out of here. No, so essentially what happens is obviously we compete a lot with the bigger dealerships. So let's I won't name names, but let's just say your large car brand, they have their own finance departments. Right. Yeah. So essentially a lot of the bigger players, they lend their own money. So they're lending their own money. They're not borrowing it from the bank who then gets it from the RBA, and obviously it has to be at a certain rate. So that's the first thing. So essentially what they do is they will market let's say a rate of 0% or 1.99, which obviously there's no way for them to make money from that essentially, because obviously the RBA have their cash rate, which then lends to the retail banks, and it works in that way, right? But essentially it's more of it's a marketing. It's a marketing tool for them to basically get people in the door to think, okay, well, why am I paying 1% on this? I want to go buy a new car. But then I guess from the back end, they can do things like
load the car.
Yeah, exactly. And they can do that. A bank can't do that because obviously, like I said, they're borrowing the money from somewhere, from the central bank. They can't then say, oh, we're going to let it out at 1.99% because they're not making any money from it. So, they can load the car up or it's essentially their own money. So it's a bit of a marketing tool then to get people in. So we obviously compete with that type of stuff all the time. The other way that it can be done is certain suppliers can do what's called subvention.
Okay.
Where they,
heard of that.
Yeah, so it's essentially they buy the rate down. So essentially a supplier, they might run a marketing campaign or a sales campaign for 3 to 6 months, and they'll say, okay, we're going to, finance this particular asset for 3.99% for the next 6 months. So essentially what then happens is the supplier will actually pay I'll go to the bank and say, okay, what rates or what deal can we get for something like this? And then the supplier, let's say they've got old stock or just something they want to get rid of, they actually pay the difference between, let's just hypothetically say it's 6.99 to 3.99. The supplier will actually pay the difference
to fund that
promotion. Yeah. Yeah. So that's called subvention, which is it's pretty widely used.
And do you and when a client rings you that you've looked after and they've got this amazing product, do you coach them through that, or are those deals are just too good to refuse and you just take them?
Yeah, well, I'll always get everything on paper, because a lot of the time people can throw around base rates which aren't really the comparative rates. I always try and get the numbers in front of me so I can actually compare apples for apples instead of apples for oranges. If the deal's better, I just say, look, we can't get anywhere near that because it's a special time most of the time.
Yeah,
go with that.
Yeah. Okay. Awesome. Now let's take a little bit of a different angle. I know that you're a fit bloke, and part of growing up you did a lot of sport. I heard on the grapevine that most of the lunches we've gone to have involved some form of alcohol, and you've given up on the alcohol. So if you do take me to lunch next time, Josh, I know you're going to be on the soda waters, but tell me, you're wearing a Whoop, and so am I, and I've had it since Father's Day.
Addicted
it has been addicted, and I'm only addicted because of the stats, not because I'm healthy. Yeah. But take us through the journey of this dry 2026. What's been happening? How did you come up with that decision, and are you seeing any of the benefits?
Yeah. So the last 3 years, I've done 100 days off with one of my really close friends, Sevan. So we've done 100 days in a row off alcohol for the last 3 years and raised money for different charities.
Okay.
Last year, Jihad and I met a guy called Wayne Holdsworth, who's the CEO of Smack Talk, which is a suicide prevention charity. So we are now really heavily involved with this charity, and we met Wayne and basically learned about the charity and just basically fell in love with Wayne. He's an amazing guy. And the charity's really, really, really cool. So the last 3 years, doing 100 days in a row not drinking, I just basically felt like a completely different person. Just productivity for the business, more energy, just felt like all my relationships were so much better. And the main thing is I just feel like I've just got so much more time to do certain things, to be productive, whether it's going to the gym, getting more work done, and So yeah, essentially, I just basically felt too good after an day. I thought, well, okay, well, why don't I do the whole year this year? And there's obviously certain volume targets and sales targets I want to get this year for Lion. And I just thought, why not? I said, this is going to help me tenfold, I think. And just, productivity levels are just completely through the roof. And just feel so much better after not drinking. It's been really, really good.
Take us. I feel like you sound like an alcoholic guy. How much were you drinking?
Yeah. No.
So I just want to get a feel for the gap between where you were at. So the Whoop, I don't know if you do it. I've got a journaling component of the Whoop for those that don't have one, where at the end of the day you can pick the journaling you can do. And one of them, the prompt that comes up on your standard Whoop is, did you have a late meal? How much water did you have? And so on and so on. But one of them is, how many glasses of alcohol did you have? And I got this around Father's Day leading into, as you know, the summer months and Christmas. When I was journaling, I don't ever really drink enough to get drunk, but I was surprised how often I would drink. And it was, 2 drinks. Last drink was at 8 p.m. The next day I'm journaling and I'll go, shit, I only had a glass of wine. And I reckon there would have been a moment from about November till January. I'm like, I'm drinking every single day. And it came to home for me. I'm like, I'm not getting drunk. I don't feel like it's affecting me because I don't even get tipsy at times. But it's just a beer when you get home or a little whiskey when you get home, or you're out on the weekend, you're out at dinner, you order a wine, and it just adds up. The calories add up and so on. And I had started recording the Whoop a little bit more, a little paying attention after I recognized this. And on the days where you don't have an alcoholic beverage, especially late, you just, the scores you get on your Whoop results is just phenomenal.
Yeah.
Oh, shit, this is making sense. I still not drinking as much. I stopped journaling there for a while because I'm like, this is really bad. I want to keep drinking, but I don't drink as much. I feel better.
Yeah.
But take us back to going on this diet. Let's call it. What do you call it?
I'm essentially just calling it no alcohol for French 65.
Okay. So you're not drinking for 365. What were you drinking prior? Like, what was the roughly? Just
so to be honest, I'm not a huge, but being in my late 20s, it's more of a binge drinking situation, right? Yeah. So I never really drank during the week, but obviously, if you have 30 birthdays or weddings or whatever it is.
It's Thursdays, right?
Yeah.
And it knocks you out for at least 2 or 3 days.
Well, yeah, exactly right. So, if you go out on a Saturday, especially me, I'd still feel not that great until probably Monday or Tuesday. But even I just think that hours are so important. Like even rocking up to the office on a Monday morning, if you had let's say 7 or 8 drinks on a Saturday, if you're out at the pub with your mates or you at a wedding or whatever it is, you just don't feel as sharp and switched on.
Yeah.
And then you just sort of, I feel like you kind of nearly ever lose a day. But it's funny, I didn't actually get my Whoop until Christmas, so I didn't actually start wearing it until Jan 1 when I started drinking. So I'm not going to have any of that old data, so I can't compare anything. So I'm going to have to wait until Jan next
year. Have you got in your age profile? Have you ever wanted enough to get that yet?
Yeah, I'm a couple of years younger.
Oh, well done.
Yeah,
well, you're a fit bloke.
Don't tell me it's the other way.
No, I'm smack bang on my age.
Yeah.
But I was about 6 months older. It was showing 6 months older. And it's very interesting, the metrics that it runs. The biggest issue that I have in mine is that I don't get my heart rate in that really peak zone. So if you, again, in the Whoop world, if you're wearing one, it measures how much you work your heart rate. And when I looked at it, I was getting penalized big time for not having my heart rate. So my cardiovascular strength or, endurance is not really there. So the last 3 or 4 weeks I've been doing Pilates and going for walks. And so, I want to, that's what I think for people that have a goal-oriented mindset, the Whoop does that. It gives you this real data. You're able to set some really cool goals and so on. What about sleep? And again, being a fit bloke and also now being dry in terms of your alcohol intent, have you found your sleep improve?
Yeah, it's tenfold. So I'm pretty strict with trying to get consistent 7 or 8 hours every night. My sleep scores in the lowest one ever has 80.
Oh, wow. That is phenomenal.
Yeah.
Do you think the fact that you've consistently not drank alcohol, the improvements kick in. Is it like weight loss where it's like if you drive for a week, it's no big deal.
Yeah, it's like,
Do you think, are you finding it's adding up as you haven't drunk for?
Yeah, so I think I did some. I think it takes, don't quote me, so I think it's 6 weeks for your liver to completely get rid of alcohol.
Oh, I was in like get back to real healthy.
Yeah. I guess baseline levels, but honestly, like if I like I said, if I had a drink on a Saturday or whatever and I didn't drink during the week, my sleep was never that great. But I think after probably, because I've done this 3 years in a row now, 100 days. So I reckon after week 5 or 6, you realise how good your sleep is. And you know, sometimes in your sleep, you wake up a couple of times during the night.
Yeah.
I notice when you don't drink, you sleep the whole way through.
Yeah.
Every night.
And I find when you drink, I went out to a show last Friday and we had a late meal because we couldn't get one early. So my wife and I had a late meal and I got enticed by the menu and had a glass of wine. That night, my average heart rate when I normally sleep would sit sort of in something in the 50 zone, anywhere between 54, 55 to maybe 60. I was at 67, 68 for most of that night. And I know what it was. It was late night eating and it was the alcohol. You just elevates your heart rate for the whole night and you don't feel rested. You just get that clogginess.
Yeah.
I'm like, shit, it was that because I hadn't had alcohol that late for a long, long time. So you just see this real correlation, especially a late night alcoholic beverage really kills you. So
yeah, and something that I'm trying to get better at is going to sleep earlier. But I think I actually discussed with you before. I find it really hard. So during the day, I probably get most of my work done between 7 p.m. and 11 p.m.
Oh, really? I used to be like that. I don't do that anymore.
And the reason is because during the day, no one calls. 7 p.m. to 11 p.m. no one calls me. So during the day, if I've got I don't know how many calls I take a day, but it's probably, whether I'm calling someone or they're calling me, it's probably upwards of 70.
Oh, really?
Yeah.
70?
I open between 60 and 70 every day.
Wow.
Whether it's calling different lenders, clients,
dealing with
settlements, credit officers, whatever it is, suppliers, all that type of stuff. And between 7 p.m. and 11 p.m., no one calls me, so I can get all of my admin stuff done if I need to get, submit applications, settlements, whatever it is. But during the day, I find it really hard because you try and get on a bit of a roll and you phone call, 5 emails coming, phone calls, it gets really difficult. So I thought it's not that healthy, but I try and get to in between 7 and 11 and I'll probably get most of my work done, then try and go to bed after that. And then I probably should be getting up a little bit earlier, but it's something I'm trying to navigate. Then also with me, I'm completely obsessed with working and I find it really, really, really hard to shut off as well. So it's just something I'm trying to navigate.
I tell you a story. I've flipped the switch on that in terms of bringing that to the morning. So what had happened for me is I was probably not 7 to 11, but I would, during the day, I have so many appointments and back-to-back meetings or what I'm doing, there's always things that you miss. You can't get through all your daily admin, right? Whether it's a phone call, email, or even reviewing a task for a staff member. And I used to do the same thing at night. And one day I woke up and I couldn't sleep. This was years ago. And I got up around 4:30, 4:20, and I couldn't go back to sleep. I was like wide awake. I shuffled around bed for a while. It was like been 5:15. I'm like, I've got lots of shit to do. I've got to get up. So I just got up. And between 5:15 to 7 a.m., which is when all my kids get up and all the room, I got to in those 2 hours, I smashed it because I work really good in the mornings. That's when I'm sort of the sharpest generally. And not 5 a.m., but in that moment I was good. But because I'd woken up really early, that night I was able to go to bed early. I was just tired and I got to bed early. And again, my body clock would just wake up at 5 a.m. or thereabouts. I'm like, yesterday was good, I'll do it again. And all of a sudden I built this habit of getting up at around between 5 and 5:30. I reckon I've done it for 3 years straight. Lately, I've changed the way I work from 9 to 5, that I don't need that 3 to 4 hours or the 2 hours anymore. Every now and then I'll need it, so I will get up in the morning. But I find that when you've got young kids, Josh, or you've got, a partner at home that you need to deal with, the 7 to 11 is very difficult. It's really not sustainable, especially when you've got kids. So for me, I now do that in the morning. What I've been doing lately is it was foregoing my health though, because I get up at 5:30. I should be going to the gym because I'm up, but I'm sitting there punching out working, and it was actually not good for me in terms of that. So now that I've been able to fix my sort of hours during the day and allowing sort of time for small admin and getting back to people, I'm just very protective of that time now. I don't need to do the morning, but I've gotten so used to getting up early. I don't get up that early, but I get up about 5:45, and I'm either at the gym or I've started Pilates at the moment. So for those
Reformer or mat?
KX Pilates, it's actually
Reformer or mat?
it's Reformer, so it's bloody hard. So I look like a tool at the moment, but it's good fun. So for those people that are listening, I think what we've talked about on this podcast in the past has been making sure your mental health, your physical health, and all of that is right, because if you're really fit and strong and come to play, your business just becomes successful. So I do agree with that. So yeah, in wrapping up the podcast, Josh, I'd love to sort of hear what the plans are. You're so young, you've got a pretty young business at the moment, but you've done amazing things. What does the next 2, 3, 4 years look like in your journey, and what are your goals?
Yeah, so I guess last week we signed our 250th client, which is awesome. So I've started with 0 clients 3 years ago, close 3 years ago. Now I've got 250. So I've got some certain, I guess, sales, and I'm not 100% sure yet, but I'm really, really happy in what we're doing and what we're building. It's a really good question, actually. I wish I would have been on to prepare that. But I don't, I don't really know. But I guess the main thing is just keep facilitating our clients as best that we can. And I guess just for me personally as well, just still waking up every day and being happy, because I'm really, really happy at the moment. And I guess really, really happy competing in a business sense and being useful.
What I love about you, Josh, you have so much passion. Very similar to me in the sense that I've always wanted to be an accountant, but if I work for someone else, I don't think I'd get the fulfillment. There's nothing like being, control of your own destiny. But we're very similar in that we both probably grew up playing sport, but I love gamifying it. For me, this is my Premier League. Being accountants, we get to, measure a lot of things that we do well, and we will measure everything. So we know when we're not doing well either, but it's the scorecard, the scoreboard, the goal setting. And then we have a team that, makes it happen. So for me, I love it. I feel like I'm continuing to play sport in business. You get to set goals. And if you know what winning looks like and you can measure it, then you really have fun doing it. So you really come across as someone that not only loves what you're doing, but are driven to make a change. So as you build out your team, they're going to be very, very lucky to be working under you. I know that you got heaps and heaps of growth to come. So you are our resident equipment finance specialist. So for those that don't know Josh, we partner with Josh at Alexander Spencer and AS Mortgage Partners. Predominantly what our team do is lending into businesses through business products, home loans and business loans, but we aren't, equipment finance is an area that is quite a specialty, and you help a lot of our clients out. I want to say thank you for that, and congratulations on the business you've built. And wishing you all the best in the future, and thank you for your time today.
Awesome. Thanks, Sevan. And obviously, thanks to AS for all the support of the last years. It's been amazing. Awesome.
Thank you.
Thanks, mate.
This is The Bottom Line, a show designed to help Australian businesses succeed. This podcast was produced by accountancy firm Alexander Spencer. At Alexander Spencer, we've been helping business owners realise their goals since 1952. And we play a pivotal role in developing, implementing, and supervising the business goals and strategies of our clients. To find out how we can help your business succeed, head to our website, alexanderspencer.com.au. To make sure you don't miss an episode of The Bottom Line, be sure to subscribe to or follow the show in your podcast app. And while you're there, leave us a 5-star review. It really helps others find the show. I'm Sevan Tuna, and we'll be back next episode with more tips to help you transform your business. And that's The Bottom Line.